Silver and gold investors, can you feel it? There's like a sense of doom, negative sentiment in the precious metal sector right now and the precious metal mining stock sector. I'm here to tell you the real story is something completely different. We got a lot of great things, great news, fundamentally, technically, on many levels that we can look to remain very excited about the future for gold and silver. We're going to cover all those in this video today, a whole broad range of reasons why, even though it may feel really challenging and cruddy right now, the reality is something much, much different. And don't forget, sentiment runs in cycles. That's the general mood. And as it can be measured, I saw some measurements this morning that said we're not as low as we've been, but we're pretty darn close to being as low as we've been in a long while. The good news is sentiment itself goes in cycles, up and down. I've been around this sector long enough to know, right? It goes from feeling like it's the end of the world, nobody ever wants to buy gold and silver or mining stocks again, to kind of a mania type phase like we had back in January. Well, the good news is we're coming back up from a trough, and we got a lot of good things to look forward to. Let's start with Peter Schiff, because gold is reclaiming, right? Not gaining, reclaiming its position as the world's reserve currency. We got a little clip from our friend Peter Schiff. Let's listen to what he has to say.
And the world is now pulling the rug out from under the U.S. The dollar is going to collapse. The dollar is going to be replaced by gold. Central banks are buying gold to back up their currencies. True. They're getting rid of dollars. They're getting rid of treasuries. We are headed for an economic crisis, again, that will make the 2008 financial crisis look like a Sunday school picnic. The biggest difference between the crisis that we're about to have and the one we had back then is this one is all in America. It's not going to be exported to the rest of the world. It's not a global financial crisis. It's an American financial crisis.
Wow. So there you have it. You know what? He brings up a great point that we probably don't refer to as often as we could here on the channel. And that is, the 2008, that's almost been 20 years ago. The GFC, the 2008 financial crisis. Yeah, it was really, really bad. But all they did was kick the can down the road. So now, right, as you know, as we've discussed ad nauseum, both fiscally, monetarily, even geopolitically, we're in a much different situation now. The factors that contributed to the great financial crisis have become much more exaggerated. What we could be in for could be even more. Now, it's not just the big central banks buying gold, like he said, it's the big banks. Let's do a quick review of some good news from the big banks, what they're telling us about gold. Here's the most recent end of year price targets by bank. JP Morgan, $6,300. Wells Fargo, $6,300. Bank of America, $6,000. UBS, as high as $7,200. Goldman Sachs comes in on the low end, but we'll cut them a little slack, $5,400. And Morgan Stanley is calling for $4,800. Now, when we look at silver, this is a great chart. Okay, this shows how silver has performed as of yesterday, May 4th, on a one-year basis. Silver up 127%, gold up 37%. The S&P 500, up 30%. Look how much silver has outperformed these other assets. The Dow, 20%, and Bitcoin down by 16%. So that begs the question. I love this, and I think you will too. Before we do that, I do want to say thank you to channel sponsor First Mint. If you want to get your hands on some of that silver, if you're a believer in silver, check out First Mint. They've got a great selection, great prices, great customer service. Everything about what they're doing is first class. Truly a premium retail silver buying experience. Here's their website. You can check them out at firstmint.com. There's their Hail to the Chief coin. Yep, and they still have $2 off on all silver rounds right now. And please note that the prices that you see on their website already include the discount. And they do engraving on bars, which is really cool as well. Let me show you this. This is the 5-ounce bar from First Mint. Upstairs, Susie, it's like her absolute favorite. She loves this thing. So again, you can go to firstmint.com. Don't forget there is a discount code VIPRB, very important person, Ron's Basement. You'll get a little discount there as well. So here's the question. This is great. If you were bullish on gold and silver on January 29th, right, when silver hit $120 per ounce, but now you're bearish on PMs, I have one question for you. Have the fundamentals improved for the U.S. government debt in U.S. dollar global reserve status since January 30th? If the honest answer is no, then you were never a gold or silver bull. You were just a momentum bull. And what he's bringing up is a powerful point. Those factors that were in place that drove gold and silver to those high levels on January 29th, all of those factors are still in place, and the argument can be made, a few of them have been made even more, a little more bullish for the gold and silver sector. Again, I want to mention, I was looking at statistics this morning. The sentiment in the precious metal sector, the precious metal mining stock sector, is back toward like pretty super low levels, guys. That alone, as that sentiment goes in waves, as that changes, that will be a big supportive factor for the gold and silver price. Here we go. Here, a great chart from goldpredictors.com. This is the gold channel that we are in. We are still in the upward sloping channel that goes back, all the way to March of 2024. This is 2 years. So the gold price is also right now experiencing very, very solid, let's say, technical support as we go forward. Now, let's go out here to, I think this one is from Michael Oliver. Silver price as a person. This is a different way to look at the silver price. The silver price as a percentage of the gold price, the silver to gold ratio. Right now, we are at 1.6%. Again, people are calling for a slingshot move, right? Gold doesn't even have to go up. But if we got back to where we were in 2011, the silver price would be double where it is right now. At its peak, okay, the silver price as a percentage of the gold price was as high as 6.5% in 1980. That would be an almost 4x in the silver price. So that's what people are referring to when they're talking about a slingshot move in the silver price relative to gold. Next up, we are going to look at the explosive demand from robotics. Okay, guys, this is something super cool that nobody is really paying much attention to at this point when it comes to silver. We talk about all these other sources of demand, and don't you worry, we're going to run through those as well. But robotics is just getting started. The estimates on the number of robots that are going to be produced in the coming 10 to 20 years are absolutely mind-numbing. Here, let's go look at the numbers first, then we'll come back to this chart. This comes from King Kong 9888, Eric Young, who says total silver needed for 1 billion humanoid robots at an average of 15 grams. That's what they're estimating each one of these robots will have. 15 grams, about a half ounce of silver per robot. This equates to roughly 482 million troy ounces of silver permanently embedded, comparable to multiple years of global mine production and major new structural demand driver. Okay, this comes from a report from Morgan Stanley, and here is the chart. Now, this chart starts in 2025, where you can see the orange bar is silver demand. Okay, so we almost have zero demand in 2025, even 5 years from now, 4 years from now, not a lot. But as you can see, as we move out to 2035, 2040, 2045, and 2050, it's anticipated that we are going to have massive levels of new demand for silver from robotics. And again, we don't even hear about that. It's kind of like jewelry, right? Think about it. It's from a big picture demand perspective for silver. Solar, we saw charts yesterday, off the charts, pardon the pun. Electric vehicles, solid state batteries, projected to demand significant more amounts of silver. AI, energy, jewelry, which is the big wild card. And then, of course, tokenization of silver. And, of course, investor demand, right? Investors going from selling silver to just actually not selling silver and, God forbid, buying silver in the United States. These are all massive potential future demand sources for silver, which probably explains why our next little clip, why he says how you should approach your silver investment in terms of how long you should hold, when you should sell. This is Bert Dohmen, professional trader, guy's been around a long time. Everybody listens to him. Listen to what he's on Kitco. Listen to what he has to say about silver. And he talks about, let me preface this. What he's talking about is if we have a big market correction, which I believe he is predicting, that we will likely have a brief sell-off in gold and silver, but how to approach that and how to approach the next 5 to 10 years with silver.
And so the precious metals will have a decline, but always bottoms out much earlier than the general stock market. And as soon as the big investors decide they want to get in again, they will buy it. And then you see gold and silver, they're going to fly sky high. But first, you're going to have that decline, and that's going to discourage a lot of people. So that's why you have to make up your mind right now and write it down what your decision is, that you will not sell for the next 5 years. Okay, that is so important, because people that they think they're long-term investors, suddenly they become, when there's a market decline, they become short-term investors and they become traders. They say, oh no, I want to trade this market. And that is wrong. You know, Jesse Livermore, he was the greatest trader in the 1920s, made lots of money short-term trading on the floor of the exchange. Okay, but he said in 1935, after the crash and so on, he said, the big money is made by sitting, not by trading.
Okay.
That's a very important statement from
Jesse Livermore. Uh-oh. Hold on here, guys. Okay. Very important piece of advice from Jesse Livermore. The real money is made by holding. Okay. The book, Jesse Livermore, I've got it right over here, Revelations of a Stock Operator, like the classic trading book of all time. What he said, what Bert said, is hold your silver for 5 years. He said, write it down. We talk about that all the time. Please, if I don't give financial advice. I'm not a financial advisor. But I will give 2 pieces of advice. Number 1, always be responsible. Don't expose yourself to too much risk. And number 2, always try to strip out emotions from any trading or financial decision that you're making. Okay. Now, next up, the big story. It's big headline news right now. Is our interest rates on the U.S. Treasury bonds. Let's look at what's going on. This is what everybody's talking about. This is the 30-year Treasury. Today, it blipped above 5% recently. We're still right up at 5%. This is causing a lot of drama. A lot of big financial pundits are saying, oh my gosh. Here's an article from Yahoo Finance. The long bond is back in Wall Street's danger zone. Okay, but I'm going to tell you why we as precious metals investors don't need to worry about it. But there's a couple paragraphs. Okay, this talks about October of 2023 was one of the last times that the 30-year yield rose above 5%. That's when investors priced in higher for longer Fed policy, heavy treasury supply, weak auction demand in the S&P dropped about 6% before cooler inflation data in the Fed pivot helped yields fall and stocks recover. I want to point out to you that at that point in October of 2023, the gold price was $1,800 per ounce. This time is different. The move comes with more moving parts: higher oil prices, war risk, sticky inflation concerns, heavy treasury supply, and a Federal Reserve leadership transition. Jerome Powell just chaired his final Fed meeting. Warsh is on deck, and markets are again asking how much pain Washington is willing to tolerate in long-term rates. Here's why it does not matter, period. Number one, inflation rules the day at this point. And what's even more interesting about what's happening right now, everybody knows that the Fed cannot tolerate these high interest rates, especially on the 30-year Treasury. They will monetize the debt, right? That's a fancy way of saying something very simple. What that means is the Fed will print money out of thin air and buy those long-term Treasury bonds. It's almost like buying something from yourself, right? Which doesn't make sense, but a lot about what the Fed does with monetary and fiscal policy doesn't make sense. When they print money and buy those long-term bonds, that will create even more inflation. We are in a situation right now where inflation drives the boat, okay? And that boat happens to be called the USS Titanic, as many of us know. All right, look, one more big hot topic that we've been covering on the channel is the tokenization of gold. And we've got a guy who I know is like the smart people out there. People like Vince Lancy are covering it. But now we've got Marin Katusa, who I saw last night, put this out, okay? While you debated gold's top, Tether doubled down 46 tons to 135 tons in the last 3 years of gold, 3 billion to 20 billion. A crypto company is now one of the largest private holders of physical gold on earth, and they're still buying. Okay, Marin Katusa is one of the smartest minds out there in the gold and silver sector. He's a guy who looks around the corner, a guy who looks into the future and sees what's coming. Vince Lancy's also talking about Tether and keeping a close eye on Tether. We are keeping a close eye on Tether. Why? Because they're tokenizing gold. But to tokenize gold, or to tokenize silver for that matter, there's something very important that needs to happen first. And that is that these companies have to buy the physical metal. So you don't have to like crypto or like blockchain or agree with tokenization, any of that. Doesn't matter. The fact is that these big companies that are looking to tokenize precious metals, the very first thing they got to do is buy the metal before they tokenize it. It's going to be, well, again, on top of robotics and everything else that we talked about, one of the major drivers of demand for metals as we go into the next 5 to 10 years. Hey guys, thanks for joining us down here in the basement today. Please, if you haven't already, subscribe to the channel. It's always a big honor to have you down here. We are the Basement Dwellers. Take care. Have a great day, and we'll see you soon.